I am Elena Novelli. I am a senior lecturer in management at CAS Business School. 3 years ago, I received the ESRC Future Research Leaders grant that the Economic and Social Research Council provides in order to fund a research project that can have an impact on business and the society. My research focuses on the choices that firms make concerning their technologies and the implications that these choices can have for their performance, both from an inventive point of view and from a financial point of view. Tonight's event builds on the observation that technological change has allowed a tremendous amount of opportunities for small firms and for large firms. So we are going to discuss about this with leading scholars that have deeply reflected on this issue, as well as with managers of top international companies that have direct experience with this, as well as with small startups that are just trying to make their way to the top. The basic puzzle, the basic intuition behind my research is that very often a new business proposition has a new technology at the basis of it. Now, the idea is that very often these technologies have many applications. They have a wide span of applicability. So now the question is, how should a firm approach such a broad span of applicability? Now this is a very important question because to each of those individual opportunities are in principle associated sources of profits for firms. So clearly, a question about the scope of the firm is very central to a firm strategy.
I think in the manufacturing world, if you are to, let's say, do a new business or introduce a new technology, I could almost see 3 steps. One is technology development, which is a bit like the technical capital. And then the other 2 steps are operationalization, the technology. So the first bit is creating all the patents and the know-how. The second bit is actually taking that concept, whether it's a process technology or a new material, and actually building a product out of it. And after that, you need a route to market or commercialization or access to, or you need access to market. So these are sort of the 3 steps. And depending on the context, you can easily find that, either a small or a large company has an advantage. So originally, I come from a large company, it's a $10 billion company, but we came up with a new technology to make these plastic bottles. So the traditional way of making these bottles is that you first make the bottle, an empty bottle, and then you fill it. We have come up with a clever way in which you form the bottle with the liquid itself. So you've taken 2 steps and combined it into one. And it's a pretty cool technology, and what it does is that it completely changes, it wreaks havoc with all the existing assets and business model of my original company, because my original company essentially makes bottles and then it ships them to another place where they get filled. Now suddenly if you say that here's a technology in which you form and fill this together, that means all the equipment that we have today becomes redundant, and the entire business model becomes redundant, because that now you have to think more like a filler, because you're filling it along with making it. So it's a totally different business model.
And the interesting thing that I've seen is that of the 2 sides, the technology side and the customer side, the bigger gap seems to be very often on the customer value proposition, right? And that's the part I have to keep re-emphasizing. Look, there's a customer value proposition and there's a profit value proposition. Very often inventors or entrepreneurs mix the 2 up. Because the key thing is, customer value proposition is you've got to look at the problem from the customer's perspective. What is the problem that you're solving? Not from your perspective or problem you're solving. And the quote that I kind of use to remind them of this is a wonderful line from Ted Levitt, who used to be a professor at Harvard Business School. It's a great line. He said, nobody ever went to a hardware store to buy a drill. They go to buy holes, because the drill is the producer's conception of the problem. The whole is what the customer actually needs. So I think emphasizing or getting that kind of knowledge into your organization is central to successful inventions, whether you do it through the individual inventor or you have a process for it.
Picking the winners. Of course, we hope we could pick the winners. It's not always the case, of course. Yeah, so we're talking about modernized models where 80% of our investments might be failing. What are the kind of ways? And all the job is to limit your risks or to decrease your risk profile. And that's where the relationship between a corporate and a venture operation is quite interesting. What the corporate can tell us is basically, yes, we like the solutions. Yes, we have piloted and tested the solutions. Yes, we think that's definitely a solution we would like to embed and develop in other parts of the world. So that's kind of insights we can get as an investor that not many investors are in a position to get access to. And that's a way to try to de-risk basically the profile through due diligence and a number of things.
This event is titled Scale and Scope, and it's obviously a citation to Alfred Chandler. And Alfred Chandler, in his work, used to associate the development of technology during the industrial revolutions to the development of the large modern corporation. So thinking about the current technological transformation, like the digital transformation, in your view, is it marking the end or the resurgence of large corporations? So is this going to be a word for small companies, or is it going to be a word for large companies?
I think that someone said from bell curve to barbell, and I think that's the way the things are going to move. I think that you will continue to see big corporations. You will get significant ecosystems of small companies. I think that's where the ones who are a bit squeezed in the middle, the mid-sized companies, are more in trouble. And I think that's where the things are going to move. And then a number of small companies are going to consolidate themselves and become big corporations. If you look at the life cycle of a company, they're all aspiring to get bigger, to get a monopoly if possible. That's the case with Google and a number of players. And most of the tech companies today are trying and coming to a point where they are getting either oligopolistic or monopolistic situations. So yeah, I think we will continue to see that ecosystems taking place. A number of corporates and big corporations are going to become too big and will start to spin out themselves. That's life, that's the way the things are evolving and moving. But yet we'll continue to see that dynamism. Can you imagine a world full of just big corporations? That would be fairly boring, I think.
Yeah. So I think I'm going to have a different spin to the rest of the panelists. I think it's really what the definition of a large company. I think especially with digital, what we call large company will be much, much, much smaller. If you look now, digital world, what we call the number one in the market, where before if it was 100,000 or 10,000 or 1,000 staff, now it's a couple of hundreds. If you take probably the number one or the two biggest companies in mobile gaming, just a couple of hundreds staff, where it used to be thousands. If you took one of the very successful French companies, the number one car sharing company, BlaBlaCar, they are 250 people. So what we call the large company, number one in the market, used to be quite 10 times the size. Now it's going to be really going to shrink because of the digital, also because they're going to be replaced by AI, robots, but everything that can be digitalized will be less. The definition of a large corporation will be, I believe, much, much smaller. So.
The corporation will keep existing, and I would add to what Gautam was saying, that another mechanism in which they perhaps are better than the market is knowledge, integrating knowledge, so back to my earlier point, which will make them sustainable.
I think there is space. I think the likes of Unilever and the P&Gs and the big, the Electroluxes, the people that we work, they have big sway because they have the opportunity to be able to acquire those companies. It's whether the CEOs have the confidence in their product to keep going with it and to maintain that all the way through, or to be comfortable with an acquisition, going through a merger or an acquisition being taken over. And I think that's the balance. But I'm gonna back on the small guy and say that that we're going to be all right.
Tonight's event opens a research workshop that will take place tomorrow and that will involve some of the world's top academics in corporate strategy and technology innovation management that will come to CAS Business School to present their latest research works.
As a founder of a startup, I think it's very important to keep having strong interactions with students. Obviously, that could be our next hires and talents. So we need to make sure we are always connected with I would say, with the students' world. But also, it's an opportunity to share learnings, best practices, all the things we did wrong or right, and to learn something from out of that.
It's critical that CAS holds events like this. I mean, this is a vibrant hub. You can hear it behind me. And that energy comes from the intersection of theory and practice, and tonight's event shows just that.